Thank you, Seth. Thank you, everyone. Thank you, Miami. Good morning. Hope you guys have a fun time last night. Dcentral is one of my favorite conferences every year, but that's not what we're here to talk about. We are here to talk about DeFi, and I'm going to tell you one thing right now, ladies and gentlemen. I got three really bright minds in this DeFi space sitting next to me, and they have to convince me of one thing. Let me ask you a question. Do you believe DeFi is dead? Because I think DeFi is fucking dead, and it's up to you guys to convince me otherwise. So please go ahead. We can start right here. Introduce yourselves, what you do, and then let's get into this conversation because this is going to be fun.
Is this working live? Okay, cool. Sweet. So Andrew Cox, Director of Application at Kingdom Studios. So we have an amazing NFT hero-based RPG essentially. Old school retro graphics and questing, leveling, all you think you can do with an NFT. Basically an NFT with utility that our players can have and take with them and kind of make their own. And we have some people, I know there's some people in the audience with hundreds of heroes. These NFTs are super popular. Myself, I work on the front end. I assist where I can in basically everything that goes into making the game. Hooking in contracts and kind of managing as much as I can to make the game great. So yeah, that's me, and I'm gonna prove you wrong.
Good.
So yeah.
My name is Nate. I run marketing at DYDX. DYDX is the leading DeFi exchange in terms of volume for cryptocurrencies. We offer perpetuals, which are basically a derivative form of product for trading Bitcoin, Ethereum, a bunch of altcoins. We're the leading deck, so I'm sure I will disagree with you fundamentally, but I'm looking forward to talking more about it.
Yes.
I'm Chris Esparza. I'm the CEO of Vault Finance. We're essentially a tech solutions company for investors and projects, so we solve problems in this space, and our first offering is a sell-less exchange. I think we're going to have a lot to talk about as well.
Well, thank you, gentlemen. All right, so 2020. Let's get in our DeLorean. Let's blast back in time to 2020 DeFi summer, baby. It's 2021 actually, right? It's the summer of DeFi. People are throwing crypto onto platforms, fucking ripping APYs. Give me my yields. Woo, Cowboys, let's go, baby. Now what? I'm afraid to put my money on anywhere that's going to hold it. I don't trust a single custodial service to do anything with my crypto. Please tell me, how can this survive after what we have seen for the last couple months? How does DeFi survive all of this?
Yeah, so I think the key right now, we go through cycles. We had a bull market, obviously, 2021. I was there. I was loving it. I was riding it. Everything has cycles, stock market as well. I think the whole market is down right now. I think the biggest thing, at least from what I see in our community, is just what we can do right now in the bear market is build. It's a build market. It's not a bear market. And that's what we do at DeFi Kingdoms. We just, shit happens. Excuse my French.
So how do you get forget about institutional money, how do you get retail back and get the confidence back and saying hey, DeFi is a big thing. I love DeFi, but how do you get the confidence back of just the everyday investor?
Yeah. So I think what we have that's special is our community. I would say, you say DeFi is dead. I'd say maybe easy DeFi is dead. I think it takes effort, it takes work, it takes a focus on a specific niche and a focus on a specific way to improve the market, improve customer sentiment. I think the biggest thing we can do to improve customer sentiment is just continue building, continue showing that we are committed, continue showing that when they trust us with these small things, like the small amount of things that we can take that and turn into big things and keep going, keep showing that we are consistent. So that's what we're doing.
So Nathan, let me ask you a question. Nathan, the title of this conversation is how DeFi will change the current infrastructure. How will it change the current infrastructure? What does that even mean?
I think a lot changes fundamentally. So I think everything for everyone here in this room, top of mind is obviously FTX, right? And the big issue with FTX is it's unregulated, centralized exchange, basically. It's not DeFi. No one really knows where their funds went. We have a rough idea of Alameda's involvement, but the reality is the current infrastructure is set up in a way that we have to trust audits as opposed to code. And I think DeFi fundamentally solves a lot of the problems that we're facing. So for example, DYDX, we're non-custodial. We never hold custody of your funds in the first place. You just deposit directly onto a smart contract. So you know exactly where your money is at all times. We never hold ownership over it in the first place. I think also transparency should be a default as opposed to us assuming that whoever's holding custody of your funds in the first place is doing the right thing and not doing quote unquote sus activity or stuff that you don't really know what's going on behind the scenes. So for us, Etherscan, you go and look up the DYDX smart contract, you can see all of our token holdings, you can see our audit reports, you can see our open source code. So in real time that updates, so you always know exactly what's happening for the protocol. So we need to move towards an infrastructure system that is built on transparency by default, trusting code as opposed to audits or the word of centralized actors. And DeFi in general, I think the rule of thumb should be you're only as decentralized as your least decentralized component. So at the fundamental core of your protocol, if there's one centralized entity that makes all the decisions, holds all the funds, you're not really DeFi to begin with. So the question is really, how does the tech catch up to the point where everything truly becomes decentralized and we build for a DeFi future? And in the case that that happens, I think that it 100% is the future because it avoids all the pitfalls of an FTX.
I love that. And I think, excuse me, talking about how you guys are the non-custodial, decentralized application for what you do. I think that's the most important thing. It's like, because again, no one's going to trust a custodial service at this particular moment. And I agree with you guys that yes, our attention spans as humans is very short. And in the crypto space, yeah, in a couple months we'll forget about all of this, right? And something cool and shiny will come along, and that'll catch our attention. Chris, kind of piggybacking off what Nathan said, what do you think about the current infrastructure and how all of DeFi will change this, especially with like what Vault's doing?
Yeah, and I completely agree with you because, and we have a DEX as well too, Vault Finance with Novation, and in 2021 it was kind of the honeymoon phase. Everybody was having a great time. Everything had that nice glow to it, and now work's having to be done. And the market isn't so forgiving, so work has to be done. And for us, our pillars of what we stand for is professionalism, transparency, and superior utility. That's the three prongs that we stand on. And so I absolutely agree because we have to put that transparency first. Even though we're in the DeFi space, that needs to be the default. And FTX and custodial wallets, those type things, I think there's a lack of education in this space as well too, because people need to own their own money and they need to own their own financial understanding as well too. So that falls on investors, but that also falls on us, and everyone as well needs to take ownership of that, because the more educated we are, the better decisions we're going to make. And then when you have platforms like ours that are decentralized and places where you can trade, but we don't custodially hold your money, that transparency is really important. So everybody has to play their part.
Do you think, follow up to that, do you think more of these centralized custodial services will just go by the wayside after this? Do they stand any chance to survive?
Well, I think we're seeing money flow away from there and come to DeFi. So I think if I'm a numbers guy and I'm a logic guy, so DeFi is dead. Well, money is flowing, and FTX, unfortunately helped that. And there's the centralized exchanges. They have a black eye on them right now. Are they going to go away completely? And I don't believe so. I think they're still going to have a place and play a role, but I think people are starting to understand that things are a little bit different, and they're going to start looking more into it and be like, why is there a difference? And this is really our opportunity to educate people and go, look, this is the difference between a centralized exchange and a decentralized exchange. This is the difference between custodial and you managing your own money and making your decisions and having, it's still in your hand.
Yeah. Yeah, so DeFi Kingdoms also has a DEX, fully decentralized. I would mention, I don't know, I come at it from more of the game side, I guess. But we have our own subnet through Avalanche, and I think a big part of what we're doing right now for like transparency and decentralization is we're kind of opening up our subnet for other games, other kind of protocols to launch on that, other contracts. So we're kind of removing the whitelisting and making sure that anybody who wants to build on our chain can. So I think as they mentioned, just transparency, making sure we're making things as decentralized as possible. That's kind of our goal and what we're shooting for in the long run. I think it just takes a little bit of time, and I think we're learning that the sooner we can do that, the better get to that point. So yeah.
Very good, very good. All right, so now talk about trust and transparency, but also in a decentralized application, that kind of you're not supposed to trust, you're supposed to verify, right? I think that's what the message. And to what you guys have said, as a content creator, as an educator in this space, a lot of this falls on us, and it's the education and how we bring the information to people to make it palatable or relatable. I think is probably the most important thing, but just really to break it down and to stress the importance of what we're doing. But moving back into the trust but not verify. How do you the big thing now is proof of reserves, right? As a decentralized exchange, Nathan, how do you guys want to go about that? You're like, listen, we're decentralized, we don't need to show you that, or do you go and do the proof of funds, the proof of reserves?
Yeah, so Hello. Okay. Sorry about that. Yeah, I mean, proof of reserves is a good step, but I think that the disconnect with proof of reserves, and I believe all centralized exchanges should have them, is that if you show that a wallet has $20 million, $20 billion in it, that doesn't really tell the user much, right? What if user collateral on the exchange is actually 30 billion? What if your business has outstanding loans, you have contracts that you're a part of? Just having proof of reserves doesn't actually accomplish too much in itself, because it might not be enough to backstop whatever it is that you need to provide if the exchange implodes overnight like FTX does. And I truly believe the answer to that is open source code and having transparency by default. Like I was saying earlier, with a truly decentralized exchange, users should be able to see everything at any given moment in real time. So proof of reserves might tell you how much money the protocol currently has, but it doesn't tell you what else the protocol is involved in terms of debt, outstanding loans. And that type of stuff is equally important in order to backstop markets, in order to make sure that liquidity remains strong. And I truly believe that unless we move towards that direction, proof of reserves by itself is not going to prevent an FTX type of implosion again. I think there's three fundamental ways to build an exchange. The first one is unregulated centralized exchanges like FTX. This isn't the first time an exchange has imploded overnight. In crypto, we tend to have a short memory span, but there's plenty of other examples like KuCoin where this happened relatively recently. The second way is centralized regulated exchanges. I have a lot of respect for Coinbase. Brian Armstrong's doing great things. But I think that centralized regulated exchanges in the US kind of go against the raison d'etre for why crypto should exist in the first place, right? The reason why we have crypto is everything should be peer-to-peer. It should be based on the underlying technology. And regulation is really important to protect investors, but we don't want to get to the point where we over-regulate and prevent certain freedoms and access to opportunity for all these regular retail users. So then the logical answer to this is then DeFi, right? And I think our responsibility as builders, as creators within the DeFi ecosystem is make sure that we actually build stable underlying technology that isn't susceptible to hacks, is truly transparent, doesn't have a centralized entity that controls things behind the scenes. And I think the only real answer is to build the right DeFi protocol to answer those problems.
I love it. I think that's great. Do anybody have anything to add on that?
I think that was...
It was pretty good. I think you nailed that one. What's that? It was really well said. Now let me ask you a question. Does anybody have any questions for these guys? Because I think what you brought up there was really important, right? And I think that we've got to think a lot about that, especially as we navigate the waters over the next couple of months. Because again, everybody's got a short attention span. but we have to build a lot, and we have to to gain the trust back. Does anybody have any questions for these guys about anything DeFi related or about the regulation? Because you hit on the regulation, man, and I think that is that really DeFi centric? No, but I think it's really important to talk about how with regulation, with what Sam was trying to get passed through, and what Brian and all the folks at some of these bigger companies that have the money and the capabilities to get regulation through to some of our politicians and whatever they're doing, man, because it's all slimy. But how do we regulate? And as someone who wants to see this industry and ecosystem flourish and grow, but we do need to see some regulatory clarity somewhat. Again, I don't want to regulate crypto into oblivion, and I know that the regulators here in the US want to do that, but how do we get some kind of sense of regulation so that we can navigate without I don't want to pay a $5 million fine if I do an NFT drop and I don't do things right, like you're saying with some of these celebrities. How do we get this regulation into the DeFi world without it ruining the entire thing?
I think we need to, start with the fundamentals. We talked about transparency. I think that's important right off the bat. Guys that are handling these platforms, that are being spots for exchange, spots for trade, they need to step up and conduct themselves properly, integrity, transparency, those types of things. On the flip side of that coin, you've got the investors. They need to also educate themselves as well too, because everybody kind of needs to know what's going on. Then from there we can start to set what a standard is, right? What the expectations are, because I think that's part of a little bit of the issue in DeFi is some of the people are okay with the Wild West kind of feel to it, but we don't want to put in whenever somebody loses money, like we saw with FTX, that essentially, when those types of things happen, when those types of wrongs happen, people are going to be upset. People lose stuff because of it. And so what is the government going to do? They're going to get involved. They're going to put their hands in there, and usually they don't put one in this country. They don't put one hand. They put both hands, right? And fill their pockets, do whatever they can. So it really starts with us to kind of self-regulate, in my opinion, and to start building this standard, because ultimately in our space, and I tell our community this all the time, the investors have the power. If everybody decides to quit talking to Vault Finance, we die, just like that. So you have the power to pick and choose who holds that standard and who doesn't hold that standard. And I think we need to do a better job doing that. And so, from that point forward, everybody playing their parts, government regulation is going to happen. It has to. There has to be structure. There has to be some rules. But I think that is going to be a way we can do our part to limit them overcorrecting and coming in and just crashing and like you said, just blowing the whole thing to smithereens.
All right, Andrew. We know regulation is coming. So again, I started this panel out saying DeFi is fucking dead.
DeFi is dead.
Thank you, Adam. So, with that being said, regulation is coming. Decentralized finance, again, with regulation makes no sense. How is DeFi not dead? With regulation, we know it's coming. It's imminent, right?
Yeah.
How is it not dead?
I mean, it's a big world. It's not just the U.S. I guess that's one thing. I also think as creators in the U.S., there's a lot of ambiguity around what will be allowed, what will be allowed in the future. I think it's hard to plan without knowing what's coming down the line. But yeah, the U.S. isn't the only country. So there's DeFi elsewhere, and there's also countries that have come out with crypto laws that just kind of define what you're able to do, and that at least opens them up to doing it the right way, right, or at least the way that it's expected to. But yeah, I think ambiguity is the difficult part to get over.
I love it.
Yeah.
Chris, let me ask you a question. Obviously, with what happened recently, and I think we could probably all agree that, retail money in some way, shape, or form is dried up right now. And we were talking about this a little bit ago. The first half of this month, I think we saw the largest outflow of crypto from exchanges into cold storage, like in the history of crypto, right? So retail doing their thing, chilling. Institutional money, decimated. How do you get institutional confidence back into what you're doing and say, hey, listen, we've got a platform for you. Like, we can help you guys come back. How do you say, come back, come back, come back?
Yeah, I was just having a conversation like that yesterday, talking about Web 2 to Web 3 converting and our tangible real life companies that we have running around in this country making that leap. Right now in the market, it's not pretty in general, but the thing is these people are still having to grow. They're, these businesses, whatever arena they're in outside of crypto, are trying to get in this direction, blockchain. They're trying to go Web 3 version, so or that route. So we have to again, to do that. I feel like we need to have ourselves positioned correctly. And again, I keep harping on it, but the transparency, the professionalism, because when you're dealing with companies like this that are corporations and they're business entities, and they take a quick peek into the DeFi space, and they see people not manage themselves in a way that they can reflect on, a way that they can see, like, well, are you a company? Are you what standard? Who's holding you accountable? Things like that. Those types of things need to be fleshed out, and there needs to be some safety there, because those companies don't want to be having any troubles either. So I think when we conduct ourselves the right way, when we put our best foot forward, and then with regulation coming, I use the words posture and also pivot. We posture ourselves now as companies or as a space in preparation for that, whatever it could be. We just do our best to see where those lines may be drawn. That puts us in a position to be ready for it, versus a pivot where it hits us and blindsides us. And pivots are expensive. You don't want to be caught in a spot where you're pivoting, because that can knock out quite a few projects or companies as well.
I love what you said there, and I agree with you. And one thing I think that's really important, and this is probably where we're going to take the conversation now, was the Web 2 to Web 3, right? Because like every company that's Web 2 focused right now is going to be faced with a decision at some point in the next couple of years, and it's react or die. Like, if you don't shift over to a Web 3 focus, bye. How do you now onboard these companies? Again, confidence is probably at an all-time low, but we'll reiterate that memories are fast fade. How do we start onboarding people? It's still painful right now, but we're trying to set it up for 2, 3, longevity down the road. How do we get the new Web 2 people into Web 3 on a DeFi landscape? What's the messaging? Because like the question I'd asked you before was, how do we get people back, right? So like, again, like if you've capitulated, odds are you may be done, and you'll maybe sit out the rest of this market and you'll wait for Bitcoin to get to 100K, and then you'll buy back in. Like there's that meme, right? Like the door knocking on 20K, the Grim Reaper keeps going, then 40K keeps going or whatever, and everybody's in line to buy Bitcoin at 60K. So like, obviously we need to ramp that back up. But what's the messaging to these Web 2 companies to like get in and say, come on, like come play with DeFi, because this is where it's going. This is the future.
I think they are already posturing themselves to make that move. I think they're starting to see the importance. The problem is that their focus has been on Web 2 so much that they don't really know. They don't really know how to get from point A to point B. And that's where experts in our area that hold these values, that can be a kind of a conduit for them to make that crossover, is important. It's important, and it can get their trust and help them make that transition. But they're looking at it, because I'm having these conversations with companies, and so they are looking at it. And these are big companies are looking at it. We're not talking about Mama's Corner Shop, floral shop. We're talking big corporations are looking to come across, and they're looking to make moves now because they're also growing in this market and trying to do what they can to posture themselves properly. So it's a matter for me. It seems like it's education. It's not just telling them this is what if you don't already notice, this is the shift that's occurring. Here are the front runners that are already noticing this. Hey, guess what? You're behind, and let me drop some knowledge on you and show you how you get from point A to point B efficiently, and be effective when you get there.
Love it. Nathan or Andrew, you want to add anything to how would you onboard a Web 2 into Web 3 DeFi right now?
Yeah, I think education is a big part of it. I think the best analogy that I have, and I don't want to harp too much on this, is with banking, right? So it started brick and mortar. You physically walk into a bank, you deposit, you withdraw. Then we had online banking, and then we have mobile banking. But each step of the way, we had to educate the user base, right? Like, how does this actually work? And if you don't educate the user populace, they don't really understand what the security risks are, how to actually do this properly. And I think education doesn't just refer to retail users either. It also applies to regulators. So at DYDX, we just hired a head of policy. We're going to be pretty active on the DC front of making sure that we actually speak to Congress people and make sure they understand things. Because I think the reality is that I think a really good counter to this is FTX imploded, right? DYDX actually saw a triple in daily volume the day that FTX imploded. And I think a big part of that was that people are not going to stop trading. Sure, some people might be hesitant to start buying Bitcoin spot, Ethereum spot, oh, the prices are tanking. But the reality is that people went to FTX, an exchange that was based in the Bahamas to begin with, because the restrictions that we currently have in the US are extremely restrictive. You can't access certain types of products. You can't trade the derivatives that you want to. So they went to an FTX because that was the best solution. And now SBF has kind of left a hole in the regulatory scene because the person that was, talking to all these Congress people behind the scenes is pretty much has no good reputation left. He soiled it. So we have to fill that gap and make sure that we speak to Congress people to make sure that they understand here's how the underlying technology works, but also the reason why this keeps happening is because the current regulatory landscape is not ideal for trading. It's not ideal for the user base, so they keep going to these other exchanges that have these liabilities and these risks associated with them. So when I think about how we onboard new users, obviously we have to educate the retail user base, but we also have to educate our regulators and our politicians so they understand the reason why this keeps happening is that the current landscape is not suitable for the type of vision we have for Web3, for DEXs, for exchanges, and crypto as a whole moving into the future.
Fantastic.
So I'll just say that DeFi Kingdoms kind of started as like when it first launched, it was a DEX essentially, but a gamified DEX. So a big draw, I think, in the very beginning was basically educating people how the DEX works by putting it in a form that they understand, that's relatable. I think now, dead battery. So now, I mean, we're kind of on the other side of that, where I think originally we were bringing in Web3 enthusiasts who were excited about a gamified DEX. We're now moving to the point where we're going to want to try to onboard Web2 users. And I've had the chance to talk to like several companies that are making the onboarding experience for Web2 users just so much easier. Essentially, letting them not worry about, signing up for Coinbase, buying currency there, sending it to our DEX, converting that to our token, getting in the game. A big part of what we're moving towards is letting people kind of have an onboarding experience right on our site, right on our game, kind of make it fit the paradigm that Web2 users are used to. So I think a big part of what we can do in DeFi is just kind of education, like these guys said, making sure that people understand the ins and outs of it. I think the way we have it gamified helps kind of ease people into it. So,
let's frickin' go! All right, guys, we're done. Okay. Just a couple minutes. Okay, cool. Listen, this was fantastic. Andrew, Chris, and Nathan, y'all are awesome. This was really cool. I will still maintain that there's not a chance in hell I'm giving any centralized exchange any of my crypto anytime soon. But maybe DeFi is not dead. Nathan, I loved what you said about traders. Degens will always degen. Traders will always trade. Motherfucker, this is crypto, baby. Does anybody have any questions? Yes, sir.
FTX happened a lot because
you want to? Okay. 4 guys, 1 mic. There we go. All right. Well, there's a lot to that, but for us, I can only kind of speak for us of Vault Finance. Again, our principles from the beginning to end, the buck stops with me. So I'm being the CEO. I'm the first guy, and our team is what follows next. So I make sure that not only do I have the integrity, the character, the principles, all of those things, and that those are maintained. Not we decide to trick off or whatever, but that I'm accountable, but that my team's accountable. And then I make sure that the understanding is that our investors are accountable for the position that they're in. And, education, those type things. What we prepare ourselves as a company. So right off the bat, being a lifelong entrepreneur, I felt we need to be incorporated. We can't just say, we're in the digital space, so we're going to do whatever we want. So that's one first preliminary difference where people differentiate themselves, or projects do. And I hate using the word projects because we're companies. We have money flowing through them. There's people that there's money going through it. There's investors. There's you can spin it however you want, but my personal money didn't build that DEX, and I have a fiduciary duty and I have an accountability. And so when I conduct myself that way, and I make sure our team does, and our products reflect that and bring the proper value through our DEX and in everything we do, that being the end result, I think that's how we shine. And so when regulation comes, and they may want us to do things that I'm not ready for or that I didn't know, but right off the bat, when, like what he was saying, the proof of funds, things like that, if I conduct myself as a company, you can see my profit and losses. If I'm transparent, I have no problem sharing those with my investors and them seeing where we're producing revenue, where we're not, and things like that. So for us, those are the steps we take so that people can feel, people can be confident in what we're doing as a company.
Yeah, I have a decent number of thoughts on this. I think the first thing, like I was saying, transparency by default, right? So big part of the reason why we've hired head of policy, why we're prepared to come to the table to regulators, is we're non-custodial to begin with, right? So you don't have to trust about the accountability of an individual behind the scenes like an SBF or an Alameda to make sure that they don't make risky business decisions. If we don't hold your funds in the first place, we can't seize them from you or dry up liquidity and prevent you from withdrawing those funds. So a good way to look at this is, if you can't freeze withdrawals because we don't hold your money, there's no risk of a situation where you can't access those funds anymore. So DeFi, I think, has been in a really good spot given this FTX situation, because sure, people have lost money in DeFi in the sense that, assets have gone down overall, the market's in a bear market, but never have they lost access to their funds, period, right? FTX was a really bad situation because some traders were very profitable, but all of a sudden the exchange just imploded and now you can't access that money at all. So that's the first thing. The second thing is, in terms of building the underlying technology, we're actually moving off Ethereum, we're moving to Cosmos, and we're building our own blockchain. There's a lot of reasons for this. The first one is throughput. DYDX processes about 10 trades per second, 1,000 transactional, like orders placed, orders canceled type of transactions per second. And as we continue to list more markets, that will just only continue to grow exponentially. So we need a new technology that actually keeps up with this, is fully transparent like it currently is, and is truly decentralized. So instead of us, DYDX Trading, operating everything behind the scenes, our token holders hold a lot of the autonomy. We have a DAO that operates things. So in that sense, again, you don't have to trust individuals to be accountable or not make bad decisions, because everything is transparent by default. There isn't one centralized entity behind the scenes deciding what happens with the money, what happens with the protocol. Everything's actually empowering the users and the traders. And I think that's the only true way to build moving forward this bear market.
Oh, snap. I apologize for the interruption. You guys did great. Round of applause for our excellent panel.